And, it's easy if you're not liking your job to complain about not liking your job, sit there and just twiddle your thumbs, be on Instagram, be on social media in general, but not really focus on learning a new skill. So at least you got that backup plan and you have this skill under your belt. So when you need to make a decision like you made, you good money.
Yeah. And that's how I've been working.
Man, shout out to you. And of course, it's like I had this conversation with my homie Ryan, and it's like you got to treat your, you got to treat your work as like the practice courts or the practice field, whatever it may be for your life's work. And you utilize the space and the time that you have to be focused and geared in and locked down to, numbers or whatever the case may be. And you utilize that space to learn a new skill. And, it's easy if you're not liking your job to complain about not liking your job, sit there and just twiddle your thumbs, be on Instagram, be on social media in general, but not really focus on learning a new skill. So at least you got that backup plan and you have this skill under your belt. So when you need to make a decision like you made, you good money. Yeah. And also I commend you for, once you made the decision to be, become your own boss full time, actually still, because you said you were still, pretty much working a 9 to 5. So you treated it still like a job until you feel comfortable pretty much to retire from that whenever that time comes. Yeah. So tell us about that mindset, of, did you have any nerves of, making the full-time transition? What was the mindset like of, leaving and then now no longer having a job and nobody telling you what to do, but still having to make the decision yourself to do what you need to do?
So, we get the stereotypical idea of go to college, get a 9 to 5 job, work, you'll be successful. That may be true in some cases, but yes, you'll be successful, but I may not be at my full potential. Success doesn't always equal your potential, right? So I said, okay, yeah, I'm successful, I'm doing well, I got money, I can do what I want to do, take care of my parents and stuff, but I'm not living my best, fullest potential. So of course, nobody wants to get fired from their job. I received when he told me that. I said, "Oh, snap!" Like I knew it was coming. I just didn't know when. So I was like, "Okay." The first day I took to myself, honestly, tell you the truth, I had a glass of Henny, took a shot, sat down, thought about what I'm gonna do. I said, "All right, well, most likely I'm gonna do what I do best." So everybody, I called my mother. She was like, "Well, it's nothing for you. You got a master's. You can apply to other jobs and stuff like that." And I told certain people around me that I want to work for myself. Some people was like, "What are you talking about, Wes? Like, you went to school to you just got your master's last year. What are you
Do
talking
what
about?"
everyone else says, right?
And then I had some close people to me that was like, "No, do what you want to do what you need to do." And I remember, I never forgot. I called my father, and my father's like my best friend. I spoke to him. He said, "Yeah, man, you can get another job and do the same thing you've been doing, or we could take a leap and see what you want and see what it takes you." I said, "Oh, that was it. That was it right there. That was the calling right there." So I decided to do that, work for myself, and now I've been matriculating and making sure my business has more access to it now. So I've been adding on to it. But honestly, as you said, the mindset, it was the fact that I know that I can get fired again. I know that if I decide, even if I don't get fired again, I can work at a great company, but never really see how I feel to wake up when I want to wake when I want to wake up. Some days I don't work, so when I go on vacation, I try to take a trip at least once a month. And when I want to go on vacation, I don't have to go to work. Like I don't have to do anything. I don't have to tell no one, hey, yeah, I'm not coming in today, or I might not come tomorrow. Don't get me wrong. I still like jobs. It's nothing. It's nothing wrong with having a job, but make sure that your job is setting you up, and you're not just working for your job. Your job is working for you as well. When I was working, I was taking my paychecks and I was using that to put on the stock market because I knew that this was ultimately my goal. So I always tell people you can't work 8 to 9 hours a day for a corporation and not work for yourself. You can't be come home and say I'm tired from work and you don't want to work on yourself because you ultimately you would like to work for yourself. So you need to make sure you prepare yourself in the future. So I used to get up work at 6:45 in the morning, get off at 3:15. At 3:15, I used to go study. And if I wasn't doing overtime, because I used to do overtime to get more money, so I could put more money in the stock market. And then after that, 3:15, I study for like an hour. Then I smoke some hookah, chill, do what I do. And then ultimately at night, I'll go look up stocks and things like that. And every night, this was every night. It wasn't like, oh, I'm gonna do it some night. It was every night. Fridays before I go out to a party, I'm looking at my stocks and stuff because I had to make sure this is what I'm going to do. So it ultimately wasn't that hard for me like, at the end, but starting off first 2 weeks, you ain't got no job. You don't know when you're gonna get your next dollar. You're like, hold on, something ain't right. But that's a good thing about having assets put in place. Also, I had properties, so I run it out and tenants pay. So therefore, I had some money coming in from there as well. But I know ultimately stocks was my main goal.
All right, what's up, millionaire? So I know I shared this once, maybe even twice, but here's the third time. So I'm really starting to lose faith in business cards. And the reason why is because every time I get about 500 business cards, I use about 100, 150, and my business has changed. Whether the website has changed or just things are just changing, especially when you're a new entrepreneur. I've been in entrepreneurship just under 5 years. So, things are still changing. You're optimizing, you're getting new websites, getting new Instagram accounts, and your business card really expires. So what I learned and what I love now is Popple, right? I have a Popple card right here in my pocket. And what I love about it is it's a physical card that I can put my logo on. Even has a QR code that I can scan or hold up to somebody's phone. And they have a virtual business card where I can update my information as much as I need to. I can share as much information as I want to from my phone number, social media pages, the whole nine. And I can also disable sharing that information if I want to as well. I definitely want you guys to consider Popple because as your business is changing, why spend so much money on these paper business cards when most of the times people throw them away and it's expired because you changed your business? So there's also going to be a link at the bottom of this video for you to download Popple, get your business card, or if I hold it up close enough, you might be able to scan that QR code. Nice, nice. And we definitely going to talk about the other types of investments that you get into as well, like the real estate and the rentals and things like that. But I got a couple questions, right? Because we put in there, and I shout out to everybody who's asked questions and put questions in their reservations, so that I had at least something that I could ask of. And of course, if you have questions, drop it in the chat as well, so I can see those for the end of the call. But one of the questions that I saw a lot was, it seems like a lot of people have questions just understanding, right, what risk management is. So as an investor, right, just kind of give us the ins and outs and the basics of, understanding what risk management is, and when do you know when to get in and out of certain trades or certain investments.
Okay, so risk management can be taken over all over all different investments, right? It's not just with stocks, it's not just with credits, any type of thing you could think of, there's risk management to it. So risk management says basically, how much risk am I indulging? Will I be able to take the risk if something happens? Will I be able to recover from it? And what is the last question is ultimately, what is the upside? So with that being, let's go through each one, right? So what is the risk? So if we're doing stocks, right, and I'm gonna make a option play for $100, right? I'm gonna buy one contract worth $100. So if I buy this one contract worth $100, the most I could lose is $100. But what is the maximum potential I could gain? Well, if I'm doing a call, that means that I believe the stock is going to go up. So if the stock is going to go up, there's an infinite price of how much it can go up by. So my gains is infinite. So most people may say, okay, well, $100 versus infinite, that's a good risk. But not necessarily, because if you're buying a stock at its high, all stocks have pivotal points where they just stop and then they come back up, and then they could trickle down and go back up. So that's why you want to buy low. When you buy low, you lower your risk. That's having good risk management skills. You buy the stock lower at a lower price. You never want to buy at the top. It's like the point in the stock market is to buy low, sell high. So if you're purchasing at the top, ultimately, if it drops down, you'll be selling at low. So you want to make sure that you purchase at the low and sell at the top. That's good risk management skills. Another thing says, well, what's the opportunity cost? What am I losing out of not getting into it? Because there's something called FOMO. FOMO means fear of missing out. So some people say, oh, well, this stock is running. Let me get into it. And then they get caught chasing. And when you get caught chasing, nothing good's come from chasing anything. So when you get caught chasing, you buy the stock at the high again. Because now, let's say the stock went up $3 today. And you're like, oh, this stock will never move up that much. Let me buy it. So you buy it, go $3, then go to 50 cents more. So it's $3.50. You're like, okay. And then the stock just dropped back down to $2. You're like, what's going on? Because you bought at the high. Instead of saying, I missed out, it's okay. There's millions of other more companies in the stock market. Just because you missed that one, there's plenty more. And risk management could go as well with real estate. Let's say you buy a property thinking that you can gross this much or net this much income back from rent. Well, if you buy a property in a bad neighborhood, or you buy property with a bad school zone, shout out to Janae, she told me that. And if it's in a bad area, then you might not gross that much profit. So you want to make sure that you're able to find something that's profitable with less risk. Ultimately, and when I'm on the stock market, I go for 2 to 1. Can I make $2 off this dollar? Can I make 200% off of putting 100% in? And that's really my risk tolerance. Also, I must say, before we get into anything further, I am a very risky investor. I do take risks a lot because I believe in the upside of it. I have a optimistic point of view.
And you also have a lot of knowledge backing your risk too. It's like
So that is true.
I wouldn't necessarily say for the people that never invested in the stocks to just jump in and be the super risky investor that you might be, unless they're willing to put in the time also, or the money to invest in a mentor, somebody that can guide them along the way, or the time to look at videos and things like that to at least have some kind of educational backing behind that risk. And a part of what you said, Wes, reminded me of a quote that I heard on another video that I was watching. It was something like, be fearful when others are greedy and be greedy when others are fearful, right? And it's kind of like when everybody, as you said, don't chase when everybody else is chasing, like, oh yeah, we're going to come up here, come up there. It's like that's when you kind of looking at it sideways and kind of like, is this really an investment I want to get into? And really kind of be greedy when everybody else is saying, oh no, the market's going to crash. I mean, if you think about it, the market crashing is a good thing because you're trying to buy low, right?
Right. So I'm glad you brought that up. Right. So I don't ever try to predict the market. I just go what it gives me. So if the market is going down, then I'm going to do things that you do when the market's down. If the market's going up, I'm going to do things that you do when the market's going up. The trend is your friend. I go along with it. So if the market is running up, I'm gonna buy stocks and let them run up. I'm not gonna say, oh, this stock is gonna go down. When everything is showing me the market is going up. That's the people that try to overanalyze things and get caught chasing, or they get caught buying the wrong thing, trying to go against the market. The market is your friend. The market yields an 8% return every year, supposedly. It has been doing that since before I was born. 8% every year. So if you know the stock market is going to go up 8% every year, even during current COVID, the stock market went up crazy. That's when the COVID made so many people millionaires on the stock market because, like you said, things was down. The market crashed for a temporary portion. People grasped that, bought stocks, and then invested them, let them grow long term. So there's different type of investments, right? There's long term, there's short terms, there's option plays, leaps, things of that nature. Short term is saying I might buy this today, I might sell it tomorrow, I might sell it in a week. Long term is I'm not looking at this for 5 years. For example, I have Tesla, bought Tesla at $200, which I was sleeping on it because when it was $95, I should have bought it. I said, I seen them up to 200. I said, oh, yeah, let me get that. At that point, people would have said I was buying for the high or buying at the high or chasing. But it's a difference when you're playing on holding something long term. Now Tesla is today, I think it is all time high at 875 or something like that. So that's $600 per share, 650 per share. That's a nice income you could have there.
There's a nice little return.
Nice little return on your money, right? Almost 600%. But who's counting? You want to make sure that you have your game plan. If you don't have it's the $1 million mindset class, right? You gotta have your mindset right. So if you don't have your mindset right, you don't know what you're doing with the stock, then you're gonna lose money. Perfect example is if you plan on holding something long term and then you selling it. Let's say if I would have sold Tesla at 500, well then I wouldn't have made the returns I made now because I believe my mindset changed. You want to make sure that you have your mindset right. Short term, long term, and then there's day trading. Day trading is something I get into a lot. That's where I make most of my money from. It's option trading. I option trade. The only thing with option trading, you have to have 25K in your account. I think they moved up to 30K, but you got 30K in your account to do that. Or you can change the settings and then you won't be able to get instant deposits. So instant deposit says if I deposit $2,000 in, they give me 1,000 up front, and then 3 days later after the money clear, they give me another 1,000. So if you're okay with that, you can day trade and you could be profitable. But day trading comes with a lot of risk. So risk management is also there very important.
Yeah, it's definitely really important, and I'm still, trying to learn the ins and outs of options myself. But before we go into the details, when you said that you follow the trends and you behave a certain way when the market is down, and you behave another way when the market is up,
Mhm.
what are some examples of like when you see that the market is down? What are some of the actions or the thoughts that are going through your head, and how do you plan for that?
Okay, I see where you're going with this. You want the secrets, you want the sauce. So let me give out some sauce. I mean, that's what we're here for today, right? So when the market's going down and things are crashing, right? You don't buy certain stocks because you know that they can keep dropping. That's called buying a falling knife. So a falling knife is the price starts up here. You buy it, it drops. You buy it again, it drops. You buy it again, it drops. So you just keep buying and buying and keep getting lower and lower. That's called buying a falling knife. You let the dust settle. So when things drop, I let it drop. I don't have to do nothing. I sit on my hands. You wait. You just sit back and wait. But there's also something you can do in options called puts. Put says that you're betting that the stock is going to go down. So if you believe the stock is going to go down, then that's when you can do a put on it. The more it goes down, the more money you make. Puts doesn't say you have to actually hit the price. There's something called a strike price. The strike price is the price that you believe the stock is going to fall to. Puts don't say you have to have the stock to fall at that price. It just has to be going in that direction. So I can make, if the stock is $10, I can say this stock is going to go to $3. Even if it goes to 5, I make money. Now, if it goes to 3, I make real money. But if it goes to 5, I made money. That's what risk management is, because, for example, for me picking that $3 strike price, it's cheaper. I may say I only have to put $20 up. But me picking that $5 strike price, well, that might be $100. Well, I'm good with putting $20 in, but I believe the stock is going down. Why? Because the market is going down. When you have a market crash, ride it down. And when the market goes back up, take profit.
Write it up.
Right.
Yeah. So, I mean, so with that being said, of course, you switch your behaviors, but are there any red flags that you look out for, before making the decision, before jumping in?
Yes. So one of the main red flags I want to make sure is not falling knife. So if I see a drop, let's say I want to buy Apple at, well, I'll give you guys some prices too. Apple, you don't buy above 139. But let's say you buy Apple at 139. Or I want to buy it at 139. And then I see it's at 156, right? And it goes down to 155. Then it goes to 152. And then it stops. I'm like, okay. But mind you, your mindset says you want to buy at 139. So that don't mean because it dropped $3, you want to go buy it at 156 or 153. You stick to your plan. But let's say Apple drops to 136 instead of 139. Oh, well, then that's a buy zone. If I like it at 139, then I love it at 136. You want to make sure that you always buy low. So if it could buy a little lower, then I'll do that. Now, another red flag is I buy stocks that are on sale, not stocks that are broken. For example, a sell maybe say 5 to 10%. That's a sell for me. But I'm not going to buy a stock that's down 50%. Something ain't right. So another perfect example with that is, let's say Apple comes out and say, hey, we're not making no more iPhones for the remainder of this month. It's October 20th, right? Let's say we're not making no iPhones for the rest of the month. What's going to happen to the stock price? It's going to go down. Cool. I'm going to buy that. But if Apple comes out and say, well, we're not making no more phones until ever, then that's a problem. Now the stock is no longer cheap. The stock is broke. It doesn't perform the way it's supposed to perform. It doesn't do what it's supposed to do. So therefore, I will not purchase that, because now not only the stock price is going to go down, it might not recover back up. Yes, we know Apple is Apple. Was Apple number one seller? iPhones. 60% came from iPhones. And then the other 40% came from wearables. But if that transitions and everybody's have to buy wearables and no iPhones, then I don't know what you're going to do with the Apple Watch with no iPhone. That doesn't really correlate. So that's why the stock become broken, and I just won't purchase it. A red flag is also doing your research and making sure that you see what's actually going on with the company. Because if the company is telling you that they're about to go bankrupt, that don't mean go buy it. It means that they're about to shut down. So you shouldn't go buy it because it's cheap. It's cheap because it's about to close.
I mean, you should probably hurry up and sell whatever you got left.
Yeah, or you shouldn't be into a company that's going bankrupt anytime soon anyway.
Yeah.
That's doing your due diligence.
Mm-hmm. I like that word, due diligence. And I mean, due diligence even comes with that 139 price mark that you have for Apple. Not sure if that was, rhetorical or literal, price mark, but that's it.
Yeah, I tell my stock group the same thing, 139.
Okay. That's like a MAO, like a minimum allowable offer or maximum allowable offer of some sort. Now, I know with real estate, we have a formula like to follow on how you find that number. I mean, is that like a rule of thumb? Was there a formula that you've discovered or was taught that like how you find out what that number is for each industry?
So when I'm looking at a stock, right, the first thing I want to do, I want to see what's the 52-week high, what's the 52-week low. That's the highest price it was at a year from today, and the lowest price it was at a year from today. So it means between October 20th last year up until October 20th this year. So I find out, okay, let's say Apple was at 160 and the low was at 120. Well, most likely not. It's not going to go back to a 52-week low, especially with the stock right now is being inflated. It's a lot going on with it. It's probably not going to go that low. So I said, okay, let me find next level. I find support level. Support level is where the stock, it falls, it's going to stop here. Then you have resistance. Resistance is where stock is not going to go past. Now, it may, once it breaks resistance, in a breakout point. Breakout point means the stock is going to fly. It's out of here. Support is, all right, well, this is remember we talked about falling knife? The stock keeps falling down and down. When it hits support, that's where it should stop at. It should bottom out there. Then that's when you want to buy. You always want to buy support and sell at resistance. Then you want to buy it again at support and sell at resistance. So the chart is going like this. You want to buy low, sell, buy low, sell. Now you may get caught in the middle, but I know that Apple is not going below 139 no time soon. Like it hasn't. If you can check the charts, it has not gone below 139 in a while. It's been at 140, 142, 146. But when it goes If it goes below 139, I'm buying even more. That's when I'm gonna load the boat. But before that, I know it's not going to 139. So 139 is a support level for Apple. So that's why we purchased Apple at.
Nice. I appreciate you sharing that and better explaining that. So what are, going back to the stock options, what are stock options? I've heard you mention puts and calls. More so, what are the differences between a put and a call?
Okay, so stock options is basically, essentially, it's a bet on which way the stock is going to go. So you can bet the stock is going to go up or the stock is going to go down. So you have what you call strike price. The strike price is the price that you believe is going to go to, and then you have expiration date. Expiration date is the time that you have for it to get there. So let's say if I believe Apple is going to go up to 150, so my strike price will be 150, and let's say I believe it's going to go there until at December. So my expiration date, I'll pick a date in December. Usually expiration dates are on Fridays, and I pick a day in December. Let's say I don't know, December 7th or December 4th, and I'll say great day. And then I'll say, well, how much am I willing to pay? So different strike prices have different amounts to pay. So the strike price may be 150. That may cost me $200 per contract. Contracts is how many you're going to buy. So 200 per contract, I may say, whoa, that's a little too much for Apple. But the further your expiration date out, the safer you are, but the more money it costs. So therefore, you have to balance. Like we talked about risk management again. Do I want to be more safe and pay more, or do I want to be cheaper and be more risky? Sometimes, most of the time, I don't buy leaps. Leaps are 6 months out to a year. I don't really buy those. As I told you, I'm a risky investor. I'm buying weeklies. I'm getting in, I'm getting out. And that's the good thing about day trading. Some days I don't let it hold the whole day. Some days I just let it go. Let's say if it goes up 20, 30%, I'm good. Now, when we talk about risk management, right, that's important to know. Some people want to see 100%. You know, I just started really seeing 100% 7 months ago. I didn't even care about 100%. I was winning 10%. 10% I was happy with. I'm like, 10% is great. Then I started seeing people hitting 1,000%. I'm like, oh. But then I had to realize that wasn't my level yet. Because they're also paying ridiculously amount of money per contract, something I wasn't willing to pay back then. So I'm buying contracts for $100 to $200. They're buying contracts for $1,200, $1,300. So yeah, they're seeing thousands of percent because look how many they're buying. And on top of that, they're not just buying one. They're buying several. They're buying several. Yeah, so that's 10,000. They're looking at spending, and I'm like, oh, I'm spending 200. So of course I'm not going to see that type of return. But then as you work your way up, you start to realize, okay, it's better in the long run. Because if you take 10% compounded every day for 80 trading days, you make $1 million. So you trade 80 days straight and you win all your trades. You just take 10% each day, you'll be a millionaire. So if I'm cool with 10%, but then I have some days where I'm not really settled for 10%. As I got better, 10% is no longer an option for me. Now I need 100 to 150% most of the time. But there's all days where I'm like, I should have took that 10%. And especially when it comes to options, I'm like, I should have took that 10% because now I'm down. And the good thing about options, though, it is quick money. It is fast money. But it's also the riskiest money. It's the riskiest thing you can do in the stock market, besides buying at the high. But you can also buy options at the high as well, because you pick a price when it's already there. Same thing when you buy in the stock. Let's say if you buy a stock, the stock went up $5 already. That may be like 40%. Why would I buy a stock that went up 40%? When I teach my stock classes to my clients, I teach them, I say, let's say the price is $100, right? And then it goes to 120 and you buy it. That's the same thing as you going to a store saying, hey, I want to buy this shirt. The shirt's $100. You're like, I ain't buying it today. You go back tomorrow and pay 120 for it. Why would you do that? That doesn't make sense to do. So I'll wait. There's something called clearance when things go on sale. And then that's what I'll purchase. So same thing with the stock market. I buy the stock. If I plan on the option, the stock is going to $50, well, then I'll wait till it drop to 30. Then I know it. I don't remember. It don't have to hit $50. It just got to go to 31. I'm in a profit already. And the difference between calls and puts, a call, you believe the stock is going to go up. A put believes you believe the stock is going to go down. Once again, a call and a put, you don't have to hit the strike price, or it just has to be going in that direction for you to make money from it.
Okay. And I mean, I'm going to try and reiterate this to see if I understand too. And for the millionaires, I'll put it in a different way as well. So you're saying that the difference with options, they are definitely the more riskier of the trades in the stock market.
Right.
Okay. And then when you have options, it sounds like they're more risky because in the traditional investing way, you're more so investing in the shares. You're paying for the share, where the option you're betting on the direction. And then if in that case, you got to put money up front to buy a contract to even be able to have that type of purchasing power or decision making. Elaborate on that.
Right. Yes. So in the stock market, you're buying shares. That means you own a portion of the company. When you're buying options, you don't own anything. You're just betting on the right to do it. Now you have it's called options because you're basically essentially buying the right to buy 100 contracts. 100 shares. So in order to sell options, you have to have 100 shares of the contract. You have to have 100 shares of the company. So if I'm buying options, I said, let's say if the stock goes from I buy a strike price of $17, and then the stock moves to 20, then I have the right, but not the obligation. You have the right, not the obligation. I mean, you don't have to, but you can. I can buy 100 shares at that $17 price because even though the price went up to $22 or $20. So you have the right to do that. Nobody really exercises the right to do that because if the stock price went up and you bet a call, you're just taking a premium from it. You're just taking the money for it. I'm not buying it based to get the stock. I'm actually buying it to make the money on up front. And that's the reason why it's more risky because you have to put the money up front. Stocks, if you don't sell the stock, technically you don't lose the money. When it's an option, as it's going up, it's going up, and as it's going down, it's going down.
Sounds a lot like wholesaling to me, man. That's crazy. So it sounds
So
like wholesaling.
it's in a similar sense. Yes, it is.
Yeah, that's what's up. Okay, so what approach when you first got started? I know that you were still in a place of employment, like most of us here, right? What approach did you take to learning stocks, and why did you take that approach? And what I mean by approach, did you take the money approach and invest in a coach and a mentor, or did you take the time and the time approach by looking up videos, reading books, really investing your time into it?
So I kind of did both, right? So first of all, I teach stock classes, right? So I can't charge somebody a price and I wouldn't pay myself. So that's rule number one. You can't charge for something that you wouldn't pay for yourself. So yes, I pay for classes. I did have various people in my life that talk to me about stocks, but I wouldn't say a mentor because we'll just give each other plays and keep it moving like that. Now, in college, I did have one of my close friends. I don't know if he's on this call. He probably is. His name is Ace. We talked about stocks and things like that plenty of times. And as we got older, we kind of drifted off in his way. But he was one of the people who gave me that whole entrepreneurship spirit. He was like, "Yo, you're gonna be great, but you can't just keep working with someone else." And I knew that. I kept that back in my mind. But he gave me that coaching and that air I need to hear. On top of that, I did take the time. As I told you before, I studied. Before I go out, I study every night. To this day, I still study my stocks every night. I have a stock/options group where I actually put the plays in. I screen record them. All you gotta do is just press what I press, and you can be profitable. And yes, there's risk, and there are losses. We don't win all the time, but lately we've been on fire. But in order to do that, I have to study my plays. I have to study what I'm going to do for the next day. I can't just go in there and say, okay, well, it's a new day. Like I study at night, and then I wake up in the morning, and I make my breakfast, and then after that, I get ready. And I go to market. I put in my play. I put in the chat. This is what I'm looking at. This we want to do. And then when the plays start rolling in, okay, boom. Like for example, I gave you the price for Apple, right? If I know Apple's getting to 139, that's part of my study. So now I know I don't have to do too much in the market because once I see Apple, I put my alert on. Buy 10 shares of Apple when it goes to 139. Cool. Once it goes to 139, I'm good. So I did study, and I also did. I paid for a stock class when I was right before I decided to give out to teach my stock classes. I had my rubrics, I had everything I had set up, and my agenda how I was gonna teach it. I said, let me take one actually to see what's going on with it. The person name I would not mention because it was terrible. I paid over $3 bands for it, $3,000, and it was horrible. It was 45 minutes. I sat there. It's no face to face. It's just a recording. You just listen, no questions. That's it. I said, no, this is terrible. So that was actually a waste of my money. But I wouldn't have known that had I wouldn't have paid for it. So yeah, I paid for several other things as well. But ultimately, I believe like you don't have to pay for that. You can study. It's gonna take you a while. It's gonna take you a long time. But you don't have to pay. You can actually just study for a long period of time and get where you need to be.
Yeah, definitely. And that was the reason why I wanted to ask that question, because I know a lot of people have their preference, and sometimes I'm right there with you. I like to fast forward the the process of learning this and figuring out which order to watch the YouTube videos, which books should I read first. I'd rather just pay the person to point me in the right direction. But with that, like, everything is a risk, and you risk investing in the wrong person. So I mean, learning from that experience, what would you say are some good takeaways as far as how you can vet out these mentors, some questions to ask, as far as for the people who are looking to invest in a coach and a mentor, what are some things that they should look for?
Well, first thing I'm gonna look for is transparency, right? So when I post every day on Instagram, I post my profits or my losses. I lost 25K in a day. I posted that. People have to see it. There's risk. I also the next day I made 4,000. The next day I made 19,000. The next day I made 7,000. I posted all those as well. You see me lose it, but you're gonna see me get it back plus more. Transparency is key because if I'm not showing my losses, you're gonna think everything's all peachy cream. And then when you start losing money, it's like, oh well what happened? And it's like, oh well, stocks has risk. You should know that before you invest. Yeah, I should. But looking from your account, it like there's no risk with you because everything looks right. But that's why the reason why I post my loss as well. I never lost 25K in a day before that. Like that was devastating. So I was hurt. I was messed up, but I had to get myself together. I had to get right. The other day I just made 20K in a day. But that and I posted that as well. I want people to know that there's losses, but there's also gonna be wins. So transparency is one. Two, you want to make sure it's somebody that you're comfortable with, because some people they want to ask the questions. I always say, I told my clients, ask me what you want to ask me. Like I have what you call a mental health day / mindset call. So everybody in my stock group, what we do is I get on a Zoom call for an hour, sometimes last 2 to 3 hours. We get on and we just talk. What's going on with your life? What's going on with you? And then I may teach a topic or so, or if the conversation is just based on how they feeling, then we just keep it there. Because one thing you never want to do is trade when you have emotions going through you. For example, if someone's close to you is hurt or affected, something like that, you want to make sure that you're not trading. And that's something a lot of people tell you. You know, if you're not emotionally stable, you shouldn't be trading. So same thing with a coach. You're not gonna ask the questions if you don't feel comfortable around them. So you make sure someone you feel comfortable with. Lastly, please make sure somebody that actually makes money, because you have these people selling you stuff like, hey, I can teach you, I can do this for you, and they'll charge you, and you see their gains, they're only making $500 every 3 months. That's terrible. It's like you could honestly walk outside, probably get more money than that than $500 every 3 months. That's not the type of gain that you want. If you want now, you can read everything they're going to teach. You can read yourself. If they only making $500, they must not know that much. So you can read everything and probably know what they know. But then when you start getting to people making thousands and you're getting up there, then they're gonna charge you, of course. And lastly, too, as just from the consumer side, don't be scared to pay, because I didn't want to pay that $3,000 for that class. I was like, I don't know about that. But then I said, let me play it, because if I didn't pay it, I wouldn't know what to do now. Like I told everybody else in my stock group, yeah, I don't want you to be under my stock group forever. Make your own. Like go out and make your own. That way you'll be good as me, and I can be like, hey, I'm thinking about this play. You think I should buy it? And it'd be better versus what you think I should buy this, because I do have a group. Last month I had over 50 members, and it's like, yes, I have nobody to ask like, hey, I don't know if this is a good play or not. So they depend on me. That's why I teach also in the stock group, because I want them to be able to learn. That way they can matriculate and go on to their own. That's what a mentorship does. A mentor should make sure that you actually either better than him or just as good as him. It's no fun if I'm the only person that you can depend on. So yeah, those are a couple of things I think you should look for in a mentor.
Yeah, all good things. All good things. And there's two things I want to touch on that you said. The first one was that transparency piece. That was big, because I remember seeing that post. I was like, ooh, that's a hurt piece. But it also was like a flash or a green light, not a red flag, but a green flag, right? Because I'm just like, he clearly doing something right to even feel comfortable about sharing that, right? Because anybody else, they don't want to share the losses, because you got something to prove. Like, you got to show people like you good at this. You kind of faking it till you make it. But being able to have that transparency is like, I don't really have nothing to prove. I know what I'm capable of. I'm gonna show you. I'm gonna make it back. I'm gonna show you. I'm gonna make it back.
And that's the thing about like stocks, right? So you don't want your stocks to go straight up, because when they go straight up, they take a straight fall. Like a step. You want to go up, come down, up, come down. The reason why you want to come down, how can you ever buy something at a reasonable price if it doesn't come down? It has to come down. So you want your stocks to go up, come down a little bit, then go back up, then come down a little bit. So that's what I did. I made, I think, like 10,000 the day before that. Lost 25, then made 4. That was a 19, 7. I'm up. I'm past the 25K loss now, and I grossed more than that. But at the same time, I still had to show you that things do come down. And then I wouldn't even feel right doing that to people, because I put in my chat with my clients. I'm like, hey, I lost 25K today. I'm gonna be it's a lot going on, but give me some time. Tomorrow we get right back at it. They was like, all right. Like they was looking like, well, you lost what? I was like, yeah, I lost it. They was like, damn. Like, but that same day, they was all making money. They was like, how are you losing 25 and we making money, and you the one giving us the plays? Because some of the plays I have high risk, and I don't put that in the chat because I don't want them taking that type of risk, because A, like you said, some of them have jobs. They can't get in and get out right then and there. Secondly, they're not watching computer screen all day. I am. So if I type get out, that might be 10 seconds too late. They could lose money from that. So I don't put them in those type of plays. Plus, they require a lot of money. Like if I lost 25K, that means I have to invest 25K. So if I lost 25K in it, then I don't want them type of investing 25K when you can lose it like that. So I don't put those in it. But and that's the thing about being transparent. You gaining trust. When they see me losing, they're like, oh, okay. But they see me get it back. They're like, oh well, you're gonna get it back. So if they take a loss in the group chat, they're like, oh damn, I took a loss. But tomorrow we're gonna get it back. Yesterday, somebody just made 2,500 in like 3 minutes in my stock group. I'm like, look at you. You're like, well, you did it. I said, no, I didn't do it. I put the play in, but you pay your money every month. You come, you show up, you do what you gotta do. So if it was personally up to me, I will pay somebody to tell me what to do because it's easier. If my pipes get broken, I'm not gonna try to fix it myself. I'm gonna call a plumber, call somebody that's an expert at what they do. So and that's the easy approach. You don't always have to know everything. I just need to know a little bit of something.
Yeah, everybody has a secret ingredient to this entree we call life, right?
Yep.
You know, you just got to rely on people it's like a potluck. Just you bring the greens, I bring the mac and cheese, uncle over there bring the, you know, the mashed potatoes,
Yep.
whatever the case may be. Everybody brings something to the table, right? So that's a good point. And I do want to touch back on the other point that you made, the mental health day, right? I'm sure you needed that after that 25. You know, the rest of the day I gotta just study. I gotta take a nap, wake up, study, you know, and get ready for the next day because I do have clients that's relying on me. And with that mental health day, this leads to my next question, Wes. Do you think that is wise? You know, because a lot of people may get into investing and they want to be their own boss, they want to control their time, they also want to be financially free. But a lot of times we get into these trades and we get into this stuff because of the fear of just not having money, you know, entering that survival mode. Is it wise to get into trading and to, you know, get into stocks when you need money?
So I've always believed you should prepare yourself. You want to be prepared, not surprised, right? So you should start things when you're comfortable. So whatever that means to you, you may not be comfortable financially. You may be comfortable financially, but not comfortably mentally. You may be comfortable financially and mentally, but spiritually not comfortably. You need to make sure that you're comfortable at what you're doing, right? So that's why I tell my clients, don't quit your job. Do not. That's not something about why would you do that? This is another form of money. The reason why I quit my job is because this is the only form of money I have. It's like I have to do this. This is how I get paid. But don't quit your job. You can have this as another avenue to make money from, right? And on top of that, you make your job work for you. You have benefits when you have a job, not just health benefits, but there's other benefits to it. For example, you want to purchase a house, you got 2 pay stubs, you got your credit right, got your money right, you'll be able to do that. Well, being that I'm an investor, I don't have 2 pay stubs, so they have to go through the loan process, which I'm going through currently now. So you have benefits. So make sure that your job is working for you as well. And on top of that, you can write things off with your taxes and things like that for having a job. So I tell people, don't quit your job. So if you need money, I don't think investing should be the first thing you should do. Even if you have money, investing shouldn't be the first thing you do. The first thing you need to do is understand the knowledge, grasp the knowledge, and get it. Once you get it, then you'll feel more comfortable because you don't want to risk your last on something you don't know about. That's the worst thing to do. Just like when people go broke, like even with Wall Street, he was gambling, things like that. You try to make ends meet. Investments is not about trying to make ends meet. Investment is trying to change your future in the long run. So yes, options is quick, but you should invest long term as well. And that's my favorite thing to do is actually invest long term because the gains are unbelievable. Like the Tesla gain for me is probably I think I'm at 1,700% or 1,800%. Yeah, it's not quick money. It took me a year and a half, but that's quick to me to make 1,700% on something. Yeah, that ain't hurting me.
Most houses, you know, you can own a house for 30 years and it don't go up 1,700%.
You can own a house and then for 30 years it still be in mortgage. You still owe. So that could be it.
Exactly.
So that could be an issue. So and investing is long term. A lot of people will trick you out, try to trick you out your spot, tell you, yeah, you should get into options and do it. You should get into options when you're ready. When you have money to get into options. Because there have been people that came to my group that I say I offer a stock class, I offer a stock/option group. They just want to join the group because they see the gains. They don't understand that half the people in my group took the class. Half the people in my group been with me since I started this in March. It wasn't like this was a new thing. They lost money with me too. They was on a journey with me. So and they were at that point they was comfortable. They was like, I'm ready to get in it. So get in things when you're both comfortably physically, mentally, and spiritually. I don't think you should go in as stocks is not a form of desperation. It's not an asset class for you to go through desperation measures for.
It should be calculated. It should be 100% planned. I agree with that. Uh, I- all right, well, Mr. Big Shot. So I know you at a totally different ballpark right now, but going back and thinking about when you first got started in the stocks, knowing what you know now, how much is a good starting point, to start investing in stocks?
That's a good question, right? So honestly, it's a common question I get from everybody, right? And I give them the same exact answer that I'm going to give you. You can invest as much as you want to lose because stock has risk. So if I know I can lose 500, then and it will hurt me, I'm not risking 500. If I know I can lose 1,000, I'll be all right. Then I might invest 1,000. Only invest with you are willing to lose because you can lose it. But also, there's also upside to it. Originally, I started with $1,500. When I decided to like go big, and I'm like, you know what, this is what I'm gonna do. I started with $1,500. Well, if I went from 1,500 to being able to lose 25K, that tells you stocks work. But at the same time, you have to put in what you want to lose because I have more money in my account. But when I saw a 25K loss, I was willing to lose that because I betted it, and I did on an option play. I never lost. To this day, I never lost money trading stocks. I only lose money on options because it's risky. But there's no set amount of how much you should start with because you could buy option. I put a contract today in my group for $12. Each contract was $12. Now that's really unheard of. Now then there's some contracts that's $2,000, $3,000. Today I bought a Netflix contract because Netflix has earnings and they beat their earnings. They knocked them off the park. I bought a Netflix contract that was $1,250 a contract, and then I bought one that was $400 contract. So it depends on how much you want to lose. And I was ready to lose the $1,200. They did bad. I was ready to lose the $400. They did bad, but on the good side, they did, and they knocked earnings out the park. And I should wake up to something nice in the morning.
Definitely should wake up to something nice. And man, you just dropping a lot of gems right now. And I hope that the millionaires that are tuned in with us live and that will be listening to this on Friday have their pen and pad out, because this is definitely pen and pad flow. You definitely dropping and spending a lot of information, Wes. So I appreciate that. And again, guys, as we starting to wrap up, not quite yet, but I definitely want to entice you all to have your questions ready. I see a couple questions trickling in. I do see them. So make sure that you send me those questions so that we can have them for Wes at the end of the interview. Now, what was that?
I said, can I ask something too? Make sure the questions are good. Like get your time worth. I'm gonna answer anything you want to know. So don't be afraid to ask, even if it's something that I charge for. I can look out today. I'm feeling good today. Today's a good day. I made some money in the market. I want to give out some special sauce today.
Hey, he said it's Christmas / Kwanzaa today. He giving out gifts. So here we go. Wes, I know we talked about, if you want to invest the money in the coach, what things to look for in your mentor and in your coach. But let's say you don't have that type of money that you can invest right away. You plan on it, but just right now, you just don't want to. You want to be proactive. So you want to take the time approach. Do you have any recommendations as far as, free channels or, learning content that's available out here that, people could take advantage of?
So that's a good question, right? So the reason why I tell everybody you want to research first, because the more research you do, the less you have to pay for. I don't like paying for things. I don't like using my money to pay for things. That's the reason I like the stock market, because I use other people's money. I don't like using my money to pay for things. So of course I'm gonna try to get the cheapest option possible. The cheapest option is not, oh, how much it costs, it's how much do I have to pay because I don't need it. So if I learn X, Y, Z, I don't need to pay for that because I know it. So let me go pay for something else. So one of the websites I use all the time, Market Watch. It's a good website, tells you about stocks, things like that. Also gives you a lot of news. Also, the Wall Street Journal. Don't get the paid version. No, don't get that one. That one's a little crazy. You make sure you get the free one, and you download the news from the stocks. Also, another one, Benzinga. Benzinga is a good website. It gets free, but it gets wild with the prices. You don't have to pay for that either. You can get the free version and download it, understand, just look at stocks and see what they're doing daily, and get the knowledge of it. Another one, TipRanks. TipRanks is a great website as well. That's my baby. That's my specialty. I teach that one in my class. That's another good one. Oh, what I did today, Earning Whispers. Earning Whispers tells you what's the earnings reports. So it tells you did they meet earnings? Are they expected to meet earnings? What's the expected price? If you know what they expected to do with earnings, and you know when earnings is going to happen, you can pretty much predict which way the stock is going to go. Because just because you know it, don't think everybody else in the world don't know it. Of course they know it. We may be just late to the party. So if I know that, and I know that they know that, I know that they're going to run the stock up or run the stock down based on they expected to be or meet earnings. So with that being said, I knew Netflix was going to knock out the park because what that Squid Game did, the most they haven't made. That was some of that was included in their earnings. And if it wasn't, it was included in their guidance. And the guidance is like a forecast of what's gonna happen in the future. So when I knew that, I said, okay, now check the earning whispers. I said, oh, look at that. They've been down. I mean, they've been meeting earnings every single quarter. Well, if that's the case, they definitely gonna meet it this time because it's the highest grossing revenue they ever had. And they did, and they knocked out the water. So those are some few websites that you can use. Also, YouTube is cool. There's people you can watch on YouTube. Just make sure you vet out who you watch. I'm more of an informational type person. I do watch YouTube here and there, but well, no, I watch YouTube every day. But I'm more of a website type of guy because by the time his YouTube, somebody has to like once somebody read the information, they have to record it and then upload it to YouTube. I could just read it the same time they read it, and then I'll be fine. And I could make my own determination from it because you listen to a video, you can't really. It's their opinion of it. It's like a callback to what they're saying. So you want to make sure that you have your own opinion on your own mindset from it.
All good feedback, and I'm definitely hoping y'all wrote down some of those websites. I definitely did. Now, with I know we probably answered this on numerous occasions too, Wes, but I'm gonna ask the question blatantly so we can have the answer blatantly, right? As well. What type of mindset should one adopt before getting into trading and investing point blank period?
Determination is one. You gotta be determined because, and I don't mean determined to make money. I mean determined to be successful because money comes with success. When you're successful, the money gonna come. But the determination takes you. That's gonna be them days where you get off work 9 hours, you still gotta go study 3 hours. That's determination. It's gonna be them days when you like, oh, I want to go out tonight. Well, maybe I should do a little study before I go. I'm never gonna tell you don't go out and party. I party, so I'm never gonna say don't party. What I'm gonna say is make sure you go study before you party. Um, Determination is one. Two, the world will know that it's gonna be all right. Like things are gonna be all right. Most people, the reason why they lose money is because they don't think things are gonna be okay. So they leave money on the table. For example, only taking 4% when they could have waited and got the 10% because they think they have a scarcity mindset. Oh, I may lose it. No, I have an abundance mindset. If I lose 25K, I can make 25K a day. That's why I was happy. I wasn't happy, but it showed me something. I'm like, yo, you can really lose 25,000 a day. So what does that mean on the opposite side? That means you can make 25K a day. And then I wanted to make it 20K at one time. I said, oh, I never made that before. But that's because I know it's possible. Things are going to be okay. So once I seen that, I was like, that's fine. Three, you gotta be open. You gotta be open to learn because there's gonna be some things that you read. For example, let me think of something good. Let's say a company decides to say, you know what, we're gonna lower the price of the stocks. Everybody gonna say, what? Everybody's gonna get mad. But being open is like, why are they doing that? And you'll see most of the time when companies lower the price of the stock performs better in the long run. But you have to have the open mindset. Once if you think, oh, people own this, I got 10 shares of this, they want to lower it down $2, I'm gonna lose money. No, you have to be open and learn. Like, okay, why are they doing this? What's going on with this? Because ultimately, in the long run, the stock does perform better. It's called share offering. So you gotta be willing to learn. You gotta have an open mindset. You gotta know that things are gonna be okay. You gotta have faith because faith is knowing that, like you said, things are gonna be right, and faith is knowing that there's gonna be good in the outcome. Like most people that lost that 25K and they left, they done with the stock market. They would never got a chance to make their money back. So nobody's gonna go in my pockets. I'm gonna be okay with that. I'm going back to get mine. So I went back the next day, woke up and got some money, and then I knew, okay, 4,000 is it 25,000, but it's a start. And the next day, that's when I knocked out the water.
Yeah, and I'm gonna even put emphasis on the fact that when you lost it, you did everything you needed to do to make it back. You put in the work, most importantly. And I think a lot of times we forget that faith without work it's just blind. It's dead. It's just blind faith. So you still got to put in the work. You still got to practice. You still got to show up and back that faith that you putting into yourself. Now, clearly, Wes, you got a lot of passion behind what you're doing, and it shows in everything that you're saying too. Where in what you do now did you find your passion? Like, what about the stocks? What about the coaching? What about everything that you're doing now in the life that you live in? Where did you find your passion?
That's a good question, right? So growing up, I have a brother and sister. I didn't really deal with my brother. My sister's cool. So I was kind of like all for myself. But as I said, I met one of my friends in college. His name was Ace. He was like, yo, man, we gotta help out people. He's one of the people that always care about people. Like everybody like, all right, go ahead. But he's like, no, like we gotta care about people. We gotta care about people. And he just kept drilling in my head. I'm like, yo, that's cool. But like, I gotta make sure my parents' rent is paid. I gotta take care of what I got going on. I can't worry about nobody else. Jay-Z said I can help the poor if I'm one of them. And I agree with that. But then the also part of it, he said, so I got rich and helped them. So I mean, that's a win-win. I didn't understand that part at first. I only understood I can help the poor if I'm one of them, because I'm like, yo, I'm worried about everybody else. I need to focus on myself. So now I start realizing I got good at the stock market. I'm like, this is something I'm really good at. Like, I'm making money from it. Then I start asking my friends, you know about stocks? No, nobody cares about that. I'm like, there's an issue. Because then when I start showing the games, everybody's like, want to know, what's that? It's the same thing you said nobody cares about, same things you don't know about. So that's where I started teaching. And once I started teaching, I started enjoying it. At first, I'm like, oh, I got class today. Got to teach somebody stocks today. It was a lot. But because my class is supposed to be an hour and a half. Sometimes we're on the phone in 3 hours. But I don't get mad about that. I do be like, well, man, he wrapped me up. Well, I was there forever. But at the same time, if it takes you that long to learn, that's what it takes. But at least I know that you got your money worth and you're going to understand the knowledge. Because what's next? You're going to join it. You're going to join the stock group. Then you come to the stock group and you don't know nothing. Now I got to go over it again. So it's better that I make sure that you understand it the first time. And then I started realizing, like, I started seeing people get money. I'm like, oh, this is what I meant to do. I always, what I wanted to do as younger, I always wanted to be, I looked at, it's crazy. I looked at a paper the other day from like, I think it was like 9th grade, 10th grade. My teacher, Miss Bond, she asked me, she was like, it's crazy. I invited her to the meeting too. I don't know if she came, but that's my baby. She like 75. That's my home. But that was my teacher. She came. She was like, what you want to do when you go there? Write three things down. I wrote 3 things down. I said, stockbroker, stockbroker, stockbroker. She was like, if that don't work, I said, if that don't work, stockbroker, stockbroker. She was like, so that's all you want to do? I said, yes. She was like, okay, well, I hope you do that. So, all right. So technically, yeah, like I don't work for Wall Street, but I am a stock broker. And on top of that, so I achieved that goal, but now I always knew I wanted to own a bank. Well, that's why I started the financial firm. So now I don't just do stocks, repair credit, real estate. I give out personal business loans. I give out personal loans and business loans. Anything you could think of that the bank does, I do. Only thing I don't have is debit cards, and that's coming. So I wanted to own my own bank, and then I was like, I'm gonna own the JP Morgan, I'm gonna own the Discover. And then I said, no, I'm gonna own Hip Financials. My last name. That's something that when I do have a child, I can pass it up to something that my father and my parents can be happy of, know that anything they want, they come to the bank to get. So my passion comes from being younger, saying something I want to do and actually achieving it.
100%. And congratulations on all that. I didn't know about the all the other things that you got going on, but that's a huge win for everybody here. Congratulations. And shout out to you for finding a way that you can not only stimulate the economy but help others, give them the advice they need, give them the funds that they need, and really make a difference in their lives. So big win for you, brother. Now I know that you shared your biggest loss, but I do want to hear about the greatest win. If you haven't already shared that, what did that greatest win for you look like?
So the greatest win for me wasn't monetary. I could honestly say that. So I had a client who was like, "Yo, Wes, this is not it. Like, I can't. Like, I can't get it." I was like, "Just stick with it. Stick with it." She was like, "Yeah, you told me to stick with it, but you making 5-6K a day. I'm not really making that." I said, "Yo, stick with it." Just she was like, "Nah, I'm gonna come." She was in Stockholm. She said, "I'm gonna come back." I said, "Okay." Now, first, I can't make you stay. Second of all, if you ain't paying, then you gotta go anyway. So I'm like, "All right, come back." She said, I said, "But come back with a different mindset. Don't come back here without your mind right." She was like, "Okay." Took her 2 months. She came back. The first day, she texted me, like, she texted me, "Can I call you?" I said, "Yeah." She's talking to me. She has a loud background, a lot going on, but I'm like, I can't really hear. But the only thing I could hear was her determination. She's like, "I'm ready to go. I'm ready to go. I'm ready to go. I'm ready to go." I'm like, "All right, your mindset right." She's like, "I'm positive." I'm like, so I started asking her questions, stuff that I know she wouldn't know, because it's like high level stock things. She was on the right path. She wasn't there yet, but she was on the right path. I'm like, okay, I see where she's going. She knew way more than she did before. So I'm like, okay. First day she came to the group, she had 500. Then she had 1,000. I'm like, wait, what? Mind you, she was just losing. 2 months ago, she lost, like, she didn't win never. And I'm not putting the plays in, but she buying them at the wrong time, buying them at the high, things like that. She was just losing. But now she at 500, 1,000. I'm like, look at you. I'm like, yo, I'm proud of you. She was like, no, I didn't do nothing. All you did was tell me to change my mindset, and I got right. And I was like, wow. Because it wasn't her buy, it wasn't her purchasing at the wrong time. She just didn't believe she had it in her. But now she's paid up every month for so far. Like, she has, like, now she don't have to pay for the rest of the year because she already paid up ahead of time. She paid me because I charge every month. She paid me every month for the rest of the year already. So now she's set, and she's been making money, and everything's been good. So I'm like, wow, it took somebody, and she didn't know nothing about stocks. Not a thing. I hope she don't mind me sharing this, but I remember we took the stock class. And I'm like, so what do you consider? How would you say a stock is? She said a stock is like a share. I said, sure, a stock is like a share. But now you ask her what a stock is, she can show you some. She's gonna show you some profits. She can show you what stock really is. So I'm proud of her, man. That's my homie.
Hey, I love hearing those types of stories. The stories that, the underdogs stop believing in themselves and they just needed that one person. And in this case, you was that person to, just push them through. And even though she left and came back, she ended up still being in the right place at the right time. So shout out to her. Shout out to that queen for getting it done and switching up her mindset. And that's really the whole purpose of the $1 Million Mind podcast, right? And you came here and delivered, right? It's all about helping people realize that it starts here first, right? You got to, in order to become a millionaire, you got to be a millionaire, right? I say millionaires because we already millionaires, whether you got it in your bank account or not. You just got to first think it in the mind first. So shout out to that queen again. Wes, as we starting to wrap it up for today's episode, before I get into the Q&A, I do want to switch gears a little bit to the next segment, which is called Rapid Fire. And this is to just clear the palate, right? We had a lot of gems dropped, a lot of fire. We just need a glass of water. So this rapid fire is just to make it fun, lighten the mood. And I'm going to ask you 5 random questions. It's brought to you by Poddex. And we just going to ask 5 random questions. I don't want you to overthink it. Just, answer with the first thing that come to mind. All right.
All right, let's go.
Coolio. First one is
yes or no, or is it?
Nah. It's not yes or no. You're gonna get a taste. This one is, which words or phrases do you most overuse?
It's lit. Let's get it. They owe me.
Let's get it.
I use those in my
I like that one. Coolio. Next one is, what is something that you like that most people don't?
Hookah. Smoke 3 times a day.
Ooh, brother. Hey, you took it to a whole nother level. At that point, you just smoking Newports.
No, don't worry.
Nah. All right. So, what do you consider your greatest achievement?
I pay my parents' rent every month.
Snap it up for that one. That's a huge one. What's the worst job you've ever had?
Shit. McDonald's. I was a manager in high school. I hated it. One day they told me to clean toilets. I was like, what is she talking about? I'm a manager here. But then I ain't lying. I changed my mindset. It showed me that you gotta be a jack of all trades, because if I ain't clean them toilets, I was gonna get fired. I wasn't gonna have no money to go to college with. So I said, yeah, let me get right. I cleaned them toilets, but I hated it every second of it. I couldn't stand it. And even when I became a manager, I hated it even worse.
I mean, I'm not mad at you for that one. I wouldn't want to clean no toilets being a manager either. I'm like, manager, I made it,
And on top of that, I was the youngest person there at the time.
So she was just trying to bully you, it sounded like.
Well, no, I feel like it wasn't just me. When I came here to visit, because we got cool, other people, like managers, was cleaning the toilet and doing things they shouldn't be doing. I'm like, oh, this is wild. But I got up out of there.
Yes, you did. Look where you at now.
Yeah, right?
The last 5th and final question. What is your favorite gadget that you own to this day?
I would have to say probably my Louis bag. Someone's real special to me. My companion bought that. So it was a good significant gift. It holds my money, holds my glasses, holds my phone. It's a Louis pouch, kinda. Some people call it a purse, but it's a man, so it's a merce. It holds all that for me. It keeps me right.
All right. Way to defend that bag, brother. Way to defend the bag. All right. So we switching gears now. You all have made it. Man, we capped out at 23. We now at 18 now. So you all have made it to the live Q&A portion of today's show. And I'm gonna start off with the first question that I see here in the chat. And now is the perfect time. If you have any questions, like Wes said, no question's a bad question. Get your time's worth. You have sat here for an hour now. So make sure that you are getting your time worth and asking some questions that are really sitting inside that gut and something that you really want to discover on today's call. So starting off with a question from Naya, she asked, how much is considered buying low? As we mentioned, buy low, buy low, buy low. How much is considered buying low?
That's a good question, right? So buying low, you want to make sure that you buy at least 5% 10% of the price. So you want to try to get less than 5 to 10%. That's what would be considered buying low. But it also depends. There's no exact price. It depends on actual stock. Because for example, I told you Apple you want to buy 139. Microsoft is $300 stock. So you ain't gonna find it for 139. You might find that for 285, 284. These are all price points that you should get in at as well. Anytime I mention a price, that's the price that you should buy at. So it depends on, you want to also make sure that you buy at support. You want to buy it where the stock doesn't fall below. That may be a lower price you want to get at, because if it isn't going down anymore, there's nothing else to do but go up.
Great answer to a great question. Next is Tristan. He asked, and I'm assuming with the context, asking, how much money and knowledge do I need to get to where you are now? So I'm assuming, where you are now is exponential to somebody who's just now beginning. So they might be taking the money approach of, fast forward that. So how much money would they need to get to where you are now, Wes?
Well, it's not really about the money, right? Because the money comes with the knowledge. So you can, like as I told you, I started off with $1,500 and I got where I'm at now. So it's not about the money wise, but if you want to take a stock class, that's something different. Yes, you have to pay for that. And we can discuss that. I think we can do a good partnership with the $1 Million Mindset podcast and hit financials, get some discounts going on, help people work. And it's just the mindset, honestly, though. Then get your mind right. And then once you learn what you didn't learn, you can put in a little ass, you can start the stock market with $50. Turn that $50 and make it exponential amount of money.
And then you said 10% every time, right?
Well, so technically, I don't have $1 million yet, but 10% every day. We have to compound it, which means that you win 10% today. Then you take that 10% and you add it, and you risk all that. Then take that 10% and add it, and do it again for 80 trading days, and you'll be a millionaire.
All right. Well, hopefully we see a lot of millionaires coming up in the next, 12 to 24 months, man.
All you need is 10%. So you don't have to. But the thing is, too, the beauty of it. Let's say if I had 100%, I don't have to trade for 10 days. Because now I'm out. Now, the problem with some people is they try to overdo it and beat the so if I make 100% today, I make 100% tomorrow. That's only 40 days left. No, just do your 10% and be all right. Now, I can't say don't take 100%. That would be foolish of me to say that. But if you that don't mean you go risk another 100% again. Still stick to your plan. Take that money, put it in your pocket, so then buy something else with it. Just make sure that you don't overextend yourself.
And it also means just because you could, don't mean that you should take those days off either.
Exactly. Right now, you don't have to trade every day. I tell people all the time, you shouldn't trade every day. I trade every day because I have people that depend on me to trade every day. So that's the reason why I do it. Plus, on top of that, I love what I do. I love trading. Like, it gets me hyped to know that I studied for something. It's like a test. I studied and went through. I did good and made me money from it.
Amen. Question from Clifton. What is 2 methods that you use to make you comfortable to jump into a play?
That's a sauce question. You're trying to learn the sauce.
Trying to learn some sauce. It's Kwanzaa though.
They call me Young Prego, so I got you. So one of the first things I'm looking for is that resistance, or is that support? If it's that support, that might be a good entry. Second of all, if I'm doing options, how much is this contract worth? Because I'm not going to pay $100 for a contract when I can only make $3 from it. That's pointless. We talked about risk management earlier. So you want to make sure how much is it worth, and you want to see if it's that support or resistance. Because if it's that support, it can do nothing but it can break support. It can go down, of course. But what's the likelihood of it breaking support? Not very likely. That's why I want to buy a support and then sell at resistance. So I'm looking at the price of both the stock and seeing where the price action is moving, and then I'm looking at the price of the actual contract. And now let me give them something else to add to that. That's with options. If I'm buying a stock, I want to make sure that the stock is at support again. I want to make sure does it have any catalyst or any type of news to report to say where is it going. So something like Apple just came out with the new MacBooks. MacBooks are amazing. They look fine. They do a lot. What did I do? Made the price go up. I bought Apple a couple of days ago, more of it, because I knew that this was going to happen. Because I seen that. I did the research on it. So that was a catalyst to make the stock move up. So catalyst and any type of news and the structure of the price and where it's at.
Catalyst and structure. That's what I heard. Yep. All right. What made you question from Idira. What made you invest in real estate as well? Was it because of the risk in stocks and it not being a consistent flow of income, or what?
So you know how everybody say you want to have 7 streams of income to be a millionaire, things like that.
Mm-hmm.
That's cool. That's great. But I want to have as much revenue or income as I can because there's no such thing as too much money, right? Also, I don't just invest in real estate. I, I buy nice homes and put low income black people in them. Therefore, I know everybody wants to. Everybody deserves to live in a good home. That is a fact. Everybody deserves to live in somewhere comfortably nice. So I try to make sure I can help my people as that, and then put them into that type of environment. What do the bank do? The bank give out mortgages, right? So I ain't giving out mortgage loans because I don't got that much money yet. But I can help you get somewhere. I can help you, find some way to live. On top of that, there's a good stream of income as well. It's never stopping. It's always coming. People always got to pay their rent. When you get the right tenants, you have no issue. During COVID, my tenants paying their rent no matter what. Like in the midst of COVID, tenant paid their rent every month. Not an issue.
Man, every day. I mean, it's like the longer you talk, West, it's like the more sauce you just drop, and the more gems is being told. Man, shout out to you, man. That's amazing. AJ asked, "Can you name the websites you mentioned earlier?" And I would say, stick to top two, because we can also run this back.
Okay. Market Watch. Top two. That's a good one. Can I get three?
Top three.
All right. Market Watch, Bazinga, and Earning Whispers.
Market Watch, Bazinga, and Earning Whispers.
Whispers. Yep.
Cool, yo. Let's write that down, fam. Let's write that down. All right. So from Shaquez, he asked, "I'm most curious about how you guys assess each risk and choose the best timing to buy and sell. Also, the risk versus reward that accompanies trading."
Okay, so the best way I assess risk is, remember, I want to do 2 to 1, right? So
Mm-hmm.
I make 2 for every 1. I don't want to risk 3 to make 1 because then that's not me making any type of money. So I want to make sure that I risk 3. I want to risk 1 to make 2. So that's 1. As far as the risk between, what was it the latter part of the question?
The last part was how do you assess the risk versus reward that accompanies trading?
Well, so if I'm taking that
Like,
question,
I guess it sounds like he's asking, like, has there been a moment that the risk was more than the reward? I guess is what he's asking.
oh, okay, basically, so I try not to, but of course you're going to get into situations where it is. You just want to make sure you take the best from it because you could be up for, let's say, if you're down in the play, you got to know, am I going to keep losing or am I going to just cut it? So when I tell people you are not married to these stocks, my stocks work for me, I don't work for them. So that means that if you have a bad employee, what you're doing, you're cutting them. What Discover did to me, they cut me. They was like, no, you're out of here. So I tell my stocks, you're out of here. I gotta make sure that it's best profitable for me. So if I'm losing money in it, I cut it. That's it. I'm not about to keep enduring the loss and keep losing when hoping it's gonna turn around. Like you said, blind faith. If I'm seeing that this is not working, I cut it. And to make sure I don't get into that type of predicament, most times I do my research. I look at stocks, look at the catalyst, look at things that's going on with it to try to make sure I'm assessing the risk as much as possible. But there's always going to be some type of risk because no matter what you do, stock market is based on other people's inference. So you may be thinking this, and everybody in this room may be thinking that, but 50 other thousand people on the other side of America is thinking something totally different, and they can push the stocks to go the opposite way.
Mm-hmm, mm-hmm. And then this question is from Shania. She really just wants to know the action steps to get started. What actions does it take? Let's say somebody gets off this call and tomorrow they want to start investing. What action steps should they take to get started?
Well, first you want to download your broker. I suggest Robinhood for beginners. Get you a brokerage app, go through the process, download it. Then you want to, or make sure you have a friend that has it, or me, and then they can get you a free stock for downloading it. Then you want to get your knowledge right. You want to make sure you understand stocks before you buy them. So whatever due diligence that you have to do for that, that's upon you. Go learn it. You can take my class. You can take classes, other people's classes. You can go on YouTube. You can read some books, whichever way you prefer. Then after that, you want to read on just once you know about how the stock market works, you want to actually find the stock that you want to purchase. Then once you find stock you want to purchase, before you purchase it, you want to make sure you want to know what you're going to do with the stock. Is it going to be a long term, short term? Is it going to be a leap? You're going to do options. What do you plan to do with it? And then after you do that, you make your first purchase, and it's lit. After that, it's on.
All right. And then what would be the approach if we want to maybe go through you to help us with that stuff and kind of jumpstart the trial and error?
Okay. So you can contact me on Instagram, Facebook, whichever you prefer. I don't have a Twitter, but whatever you prefer. And if it's cool with you, I can give a discount for the clients that's been through this podcast. If that's cool with you.
Absolutely, man. That's a way that you helping out. I'll make sure I send you all the participants so you know who's true and who ain't true.
Okay. Well, yeah, that's a good idea, right? So my class would be $500. It's a have if anybody who's in here who took my class before, it's a little heftier than that. The class is around an hour and a half to 2 hours, hopefully. If you take longer, then we take longer. That's cool. And then I would assist you with everything you need to know about the stock market. Then you have the right to either join my stock group after that, which is if you take the class, it's $75 per month. If you don't take the class, it's $150 per month. Some people may say, well, $150, what am I getting with that? You're getting all the plays that I do, everything that I do on a day. I just told you somebody today made 2,500 in 3 minutes. You can go figure with that. You can pay for the whole year next year with that. So yeah, and also you get access to me. So you can ask me questions anything. Once you take the stock class, though, I have open door policy. Once you take the stock class, you can ask me questions anytime. I'm never going to tell you no. Now, if you ask me something I already taught you, I'm gonna ask you, did you look up this, and that first? And you say yes, and you still don't understand it, then I'm help you. If you say no, I'm gonna tell you do that first and then come back, because I do have a lot of clients over like 100. So I gotta make sure that I taught my stock class to over 300 people already. So that's a lot of people that can be asking questions. And I just started teaching the classes in October of last year. Actually, this made October 1st was my 1 year. So it's been a lot of people since then. So yeah, you can do that. Also, if you just feel if you're a little skeptical or you want to have some questions, you can also hit me up as well on Instagram. Mostly I use Instagram at Wavy West, WavyWest, and you can hit me up and ask me about the class, find out what the class offer, what comes with it, and things like that too.
Appreciate you sharing that, Wes. And next question is from Raya. She asked, when to get in and out of trades. When, like, how can I guess? I mean, I think we even talked about this. Resistance is kind of like resistance and support. Are those kind of like your identifiers, or is there something that we missing?
Well, it's a little more to it too, right? So of course, resistance and support. That's when you want to get in that support and try to hit resistance. But sometimes with the stock is not support. What if it's just in the middle? So that's when you have to know. That's when you have to have a plan. That's why a plan is important. Because if I say I want to get 10% from this trade, if it goes to 9%, I'm okay with that because I said 10. That's almost there. If I say I want to get 60% from this trade and it's only at 9%, I might want to hold it a little more. But again, you're not married to the stocks. So if the stock goes from 9% and you're down 3%, and you see me back averaging that at zero, get out because it didn't go your way. You have to understand things don't always go the way you predicted it. If that was the case, we'd all be rich, but it doesn't work like that. So you want to make sure that you know when you want to get out, when you want to get in. With support and resistance is a key indicator. And if the stock is not going your way, get out. Also, if you see more upside to the stock, don't just get out. Let it go. There's plenty of times I'm like, I'm gonna get 30% from this, and I got 200%, 300%. Like the other day, I got 1100% on the play. I'm like, damn, I was really gonna try to get 100%. I got 1100. I'm like, oh, okay, I'll take that. And that's honestly that's what come with having faith and letting it run its course. Because to be honest, I went about my day, and I checked the market. I'm like, let me check the market. I went and bought some groceries. I was cooking and stuff. Let me check the market. I'm like, oh, I'm up 11%, 100%. Then I was up 1100%. I'm like, oh, okay. And then who knows how much it could have, but then that course was not being greedy. Cut that real quick, took my 1100%, got out of here.
And y'all don't mistake me, making these assumptions. Like I'm not up there with Wes yet, so I'm making these assumptions so I can get him to elaborate more. That's not that's not me acting like I know the sauce, because I don't know the sauce, man. He give me all the real sauce. But great feedback, Wes. Markia asked, what do you feel is like the best option to take when doing options, or the best method or best strategy when taking the options approach?
So options, you want to make sure that you, again, 2 for 1. If it's not going to make you some money, don't get into it because you're going to want to lose the money. If I'm only going to make $10 from this, ultimately, then why am I even doing this, right? And especially if I'm not risking $50 to make $10. That don't make sense to me. Another approach you want to do, that's actually a good question. Another approach you want to do is you want to make sure that you have some type of catalyst, some type of something that's going to make the stock move, because there's nothing worse than losing your money through theta. Theta is time decay, which is high level stock stuff. But so remember, you have the strike price and expiration price. But theta says, well, every day you hold these contracts, you're losing money from it. because you can't just sit around just hoping, wait, okay, well, one day it's gonna go there. No. They're not, the stock market not gonna let you do that. So you're losing money every time you hold the contract. It may not be that much. You may lose 10%, 10 cent, 20 cent a day, 30 cent a day. You want to check the data. So it may be better for you to take 9%, 10%, and cut it, but try to hold it to 20%, and you lose money anyway through the data, because your data kicked in, and now you lost more money. You made 20%, but you lost more money than taking the 9 or 10%. So I want to look at my data. I want to look at the price action. I want to look at and make sure that there's something that's going to actually make the stock move.
All good feedback. All good feedback. Next question from Diamonds. She asked, are there any secure industries or companies that we should look into and invest in?
Yes. So ETFs is a good one. ETFs are exchange traded funds. They don't usually run up that much. They're real calm. They're real collective. They don't really do too much. But the thing about them is when they weather the storm. So when the stock market crashed, you seen it was only down 2%, 3%. Everybody else was down 15, 30%. You know, if you lost 15%, think about it, you lost 15% of all your money, you go crazy. You be like, well, what's going on? So the stock only went down 2, 3%. You're like, oh, I dealt with that. I'm like, those are great. Also, Apple and Microsoft. Those are two stocks that don't really go down. They go down, of course, but they don't really get hit hard where you're like, oh my God, I might lose my money. You can honestly put all your money in Apple or Microsoft and go about your day and not have to ever worry. The return on, I think over the last 5 years, Apple had 990 something percent return. Tesla had 17,000% return over 5 years, something like that. Some crazy, it's an astronomical number. These are stocks that you don't have to really worry about. You just put your money in and go about your business. Now, the thing with those options is, since they don't really move, you can't really get that much money off them. You have to buy a lot of contracts. A lot of contracts cost you a lot of money. So if you want stocks that's going to weather the storm, now Microsoft is a mover though. Microsoft be moving, but it don't go down really. It's a great stock that stays in its place. Apple goes up here and there, but you don't have to worry about losing no money with Apple neither. If you want to lose something, you might lose the most 5%, if that. Like I told you, 139 is a good place for Apple. I can't remember last time it was at 139.
So it sounds like, you know, with the power plays like Apple and Tesla, they're not necessarily good for options, but good for long term.
Well, some people who specialize in Apple and stuff and Tesla to do that. So you have to get good with those to know how they work.
Mm-hmm.
Tesla is a good one for options because Tesla moves. Now Tesla is a volatile stock. It goes up and down a lot. But the reason why I said Tesla don't really go down is because if you hold long term, you ain't gonna know it went down. Because every year Tesla's going up and up and up. You got 17,000% return. You ain't gonna know that it went down because by the end of the year it's gonna go right back up. Now Apple and Microsoft are the two that you don't really have too much to worry about. Microsoft, Apple, and ETFs. Some is like Vanguard, VOO, QQQ. These are ETFs that you can invest in and you'll be fine.
Yeah, definitely. Well, we got time for 3 more questions, and I see 3 questions right here on my screen. So this is from Janae. Actually, she asked for you to kind of go more into depth on, you know, explaining what dividends are.
Dividends is a great asset tool, right? So dividends is when the company pays you for actually having the company, which I know sounds unbelievable, right? But yes, you're an investor. As an investor, one thing, if we're going to talk about being millionaires, we need to have our mindset right? Mindset says they should be paying me. I'm investing in y'all. Y'all should be paying me. That, and remember you asked me about my favorite words. I say they owe me. That's what I'm talking about, dividends. When I write that they owe me, that means it's time to collect our dividends. So dividends is when they can pay you. Most companies pay dividends every 3 months, which is every quarter. So they pay dividends and they give you a percentage of how much the stock is worth, right? So a good thing to do is buy you some dividend funds, let it sit up there. Don't get me wrong, it takes a while to get, because the more shares you have, the more you can get. But I'll give you a freebie. Main, MAIN, that's the ticker code for it. Main Street Capital, I think it's Main Street Capital Investments or Main Street Capital something. But that stock pay dividends once a month. So it ain't no every 3 months. You're getting it once a month. Now you do what you want to do with that. You take that how you want to take that. But yes, dividends are a great asset tool. Most of my stocks I like to look for. That's one of the first things I'm looking for when I'm purchasing stocks. Do they pay dividends? Because I need some free money. Free money is my favorite form of money.
Mm-hmm. Free money is a good form of money.
Yes, it's a good form of money.
Yeah. Coolio. So Cliff got another question for us, and it's It's how many contracts did you buy with Apple when you seen it was going to jump?
So today I bought. Well, I didn't even to be honest with you, I didn't buy Apple contracts today because Apple be a little funny sometimes on the option chain. So I bought 60 shares of Apple today. I think I bought it at 144. No, I bought it yesterday. I think 144 or 142, and I was at 146 or something like that. So that's a nice little quick $300, $400 from that because I already had some shares as well from it as well. But I buy sometimes I may buy the stock because if the stock moves funny on the options chain, I'm not dealing with that. That's too much risk for me. So I may just buy the stock. And the thing about buying the stock, if it goes down, you don't lose money until you actually sell it. So I bought like 60 shares for that, cashed, and I didn't even cash it out yet because I believe Apple Store's gonna run up some more. So that's why I didn't cash it out yet. But I made probably like $300-$400 from them off that one thing today. Off that one. That's the thing about catalyst. When you know something's gonna go. When you know something may push the stock up, it's a catalyst to help it run. Go ahead and go get you some. I'm gonna get mine.
Mm-hmm. Mm-hmm. All right. And here goes one more question from Madeira as well. She asks, what makes you determine long-term versus short-term, when to use a certain company for a long-term investment or when to use them for a short-term investment?
So a long-term investment means that I'm not looking at this company. I'm not worried about it. It's gonna do what it's gonna do, and I know I'm gonna make profit from it. So those companies have to be companies that have withstand the time. They have to be companies that I know have been growth. They have to have some type of growth to them. They also have to be a company I know that don't go through too much turmoil. Because if you're going to a company that's getting sued every day, a company that's getting these type of bad reports on it, they're not meeting earnings, they're not meeting expectations. There's a lot going on. That's not really a long-term hold for me. That's a get in and get out. Long-term hold, I give you 5. Apple, Microsoft, Tesla, Nvidia, Affirm. Those right there are my 5. Now they don't change. It's not like we do this podcast a year from later. I'm gonna give you the same 5 because those are my 5. They don't change. The reason why they don't change is because they're long-term holds. When they're long-term hold, I don't have to look at it. I don't know how much I made from Tesla. I don't know how much I made from Affirm because I don't even have to look at it because I know it goes up. Those are growth stocks. They're gonna take their time. They're gonna go. Oh, one more to AMD. AMD is a banger. It's a good one. But those stocks I'm not really worried about because I know they're gonna go up. Now, short-term hold is stocks that I'm getting in, I'm getting out. Day trading, I may do options on them. They may not be that long because I know that they're volatile like AMC. AMC could be up today, down tomorrow. Up today, down tomorrow. BlackBerry, another one. BlackBerry slapped today. BlackBerry did his thing today. Woo, child. But BlackBerry's like when you holding the stock, it was like $9 for almost 7-8 months. I have a close friend of mine. I told him to get BlackBerry. He bought it at the high, and then he was holding it to this day to finally he'd be able to sell it because it finally hit the price. But other than that, those are quick money grabbers. GameStop, you get in at the low, but sell at the high, get out. But BlackBerry went crazy today.
Man, it sounds like BlackBerry, and it's like that's when you know that you got the inside scoop on certain things, and you doing your research, because I know half of us probably on here was like, BlackBerry. Who would have thought you was going to invest in BlackBerry? So it's like, damn, man, you gotta get with the guru. Get with the guru. Last question before we moving on, Wes, and this question is anonymous. It says, how do you feel about paying off earnings? Like, do you buy into earnings reports, or do you kind of just leave that for the birds?
So earnings reports are a lotto. So in my stock group, when I say lotto, that means that it's a toss. It's a flip. You may hit, you may not. I don't buy usually earning plays. Reason why I like to buy sure things. There's nothing sure on the stock market. We know that. But I like to buy things that's almost sure. Netflix is almost sure. They came out with the show that sold the most ever. Why would they not meet earnings?
Mm-hmm.
Deal with Walmart to sell the clothing there. Why would they not be earnings? Netflix also just up their subscriber, I think to like 20,000 more people. Why would they not be earnings? Those are things. Those are, as we talked about catalysts. Those are things that's going to show. Okay, this stock is going to move. But other than that, I don't usually play earnings because I looked at it like right before this podcast. I looked at it and now it went up straight $19. Now it's down. It's only up $4. So even though I did all that, it can still go back down because people may say, "Oh, well, I want to sell it because I made my money." So earnings are a flip toss. It's not always a hit. It's a hit or miss. You could get lucky. Like for example, Netflix went crazy today, but people may sell it, and before I can even take profit. So I wouldn't suggest doing it unless you know for sure, like something, unless you got something that you sharing, like some information, or you just going to be like, you know what, I'm gonna risk it. Because today I bought a stock that had earnings. tomorrow or pre-market, and right now I'm down in it because I know I don't think it's going to be earnings, and don't be earnings. Usually the stock goes down. It usually be earnings for some reason. I don't know what's going on with them today, but hopefully in the morning we wake up to some money. So I'm praying on that one.
Hey, I'm throwing in a prayer for you, brother. Throwing in a prayer for you, man. All right, so appreciate all the questions that have been asked, and I appreciate all the answers that you gave, Wes. My last question for you is, I like to ask this question every single interview that we have, especially for season 3, as this is the theme of this year, self-love. How would you define self-love and what that means to you?
Self-love, that's a good question, right? So self-love is knowing and believing in yourself no matter what, against all obstacles. Also, I believe at times you need to put yourself first. You need to know when you have to buckle up and handle your own business. You need to know when you need to overextend yourself sometimes because some people may need help. But also know when you need to sit back and relax and gather yourself. Um, Self-love to me personally means I get what I want. As far as if I want something, I achieve it. If I want new clothes, I want a new phone, something like that, I go get it. Why? Because I deserve it. I know I'm a king. I know vice versa, some women. I mean, women, you're queens. I know that I deserve the best. So therefore, I'm going to do what it takes for me to get the best. Self love is also knowing that you are who you think you are. So therefore, like we say, if you think you're a millionaire, you'll be a millionaire. If you don't believe you're a millionaire, then you will never achieve it. It has to be measurable. It has to be attainable, and it has to also you have to see it first. So self love is also, I would say, reclaiming the fact that you're a king and queen, and you deserve the best for yourself, and you should do everything possible to go get it.
Absolutely. Go get it. Thinking you shall receive. Man, one of the greatest books that I've read, Think and Grow Rich, man. That's definitely a big book that gave me those tools and understanding. Like, think it and you will get it. You got to continuously put that out into the universe. So Wes, I appreciate you for dropping the bangers that you dropped so far, and will continue to drop to those who will be checking in and following up with you to get with some of those plays that you drop in. Now I want to use this space for you to plug yourself in, tell us a little bit more about where we can find you, any special projects you got coming up, any exciting news that you have to share. Now is the time and space to do so.
Well, thank you for the opportunity, first of all. Secondly, you can find me on all platforms not all platforms, on Instagram at Wavy West, WavyWest. My Facebook is my name, Weston Hip, Weston. Last name Hip, HIPP. That's 2 P's. That's the name of my foundation as well, and the name of my company, Hip Financials. The Instagram page is currently down right now, so it's getting revamped. So you can look out for that as well. If you have any questions about stocks, cryptocurrency, I know we can touch more on that. Credit repair. I have a credit class as well. It's a specialized class. So basically, you'll tell me, oh, well, I'm trying to get a house. I'm trying to get a car. I'm trying to get this. I tailor the class to what you need, and I help you get that as far as on the credit side. Personal loans, business loans, contact me for that. Anything that you need financial-wise, come to Hip Financials, and we'll take care of you. Make sure you get covered.
Awesome. Appreciate Hip Financials for all the stuff that y'all doing, brother. I really do appreciate you. Like I said again, for coming on here and being a catalyst to the millionaires out there, and of course to the millionaires that are tuned in with us live, that will be tuned in on Friday. I gotta give you all a special shout out as well for just tuning in and being part of the #1 Passion and Attraction podcast in the land. Thanks to each and every one of you who tune in, and also I gotta say thanks in advance for becoming the change agents that y'all are bound to become, especially if you apply some of these principles. And the principles of giving back, the principles of investing that Wes has shared with us today, we definitely all going to be moving in the right direction. Now, shameless plug, if you are a rental investor, right, and you are looking for some quality deals to find, to add to your portfolio, consider a company like LA True Stay, because they'll find rentals in your current buy area and your criteria. They'll go over the numbers for you and with you, negotiate the terms for you on your behalf, and get the property contracted. All you pretty much have to do is fund it, say, this is what I want, this is the return that I want, and they're going to make it happen. They'll also manage the property for you and guarantee to fill vacancy in 30 days or less. And even if the property is vacant up to 3 months, they'll even cover that vacancy up front as well for you. So consider LA True Stay. For more information, just leave us a voice note in the show notes below, or you can inquire about more information at LA True Stay on Instagram. I'm your guy, Kai Speaks, and you just heard it from Weston Hip, aka Wavy West, on the ABCs of investing and risk management. Just remember to keep focus, build momentum, and drive results so that you can live abundantly. My name is Kai Speaks, and we are out. And that's pretty much the end of the recording, Wes. I appreciate you again, brother, and I appreciate all you guys for tuning in with us.